Hello friends, today we are going to start one of the most important chapter, that is your working capital management. In the last 7 class we had done the leverage analysis, trading on equity, break even EBIT. All these we have finished in the last 7 classes. So today our discussion point is your working capital management. Let us start with what is exactly working. Working means here the capital needed, the capital required for day-to-day activities of the business. Working means the day-to-day activity of the business. What is the capital needed? And this capital is called working capital. Sometimes we call the working capital as the lifeblood of the business, as the blood is necessary for working of the body, as the blood is necessary for the life. Similarly, for a company to survive, for a company to continue production, for a company to continue activity, that working capital is very much necessary. It is the need, the working capital. Because if you take an example, let us consider an example of a house that day-to-day needs rice, potato, vegetables, all these things what we are requiring on a daily basis. How much we have paid, how much we have borrowed for this, it requires the real planning. And this is your working capital of the house. Similarly, in case of a company, working capital means the current asset minus current liabilities. What exactly the working capital is also called as circulating capital. It is circulating like a blood in the business. If the working capital is deficient or the working capital is not sufficient to continue the business will be stopped. There are lot of examples where the company has stopped production for the want of working capital. So this particular chapter, that is working capital management, is most important. So the capital required for day-to-day need, and it is the blood of the business. If we consider the current asset, what exactly is coming in the current asset? The stock. So we can write the stock. We can write it as inventory. The stock is of 3 types. One is your raw material stock. This is also current asset. One is work in progress. This is also current asset. One is your finished goods. This is also current asset. Then your debtors. This is also current asset. Then your cash, bank, bills receivable, that is BR, and trade investment. Prepaid expenses, this is also current asset, prepaid. expenses. This is also current asset. There are others also. So trade investment, as I am telling you, investment is of two types. One is your fixed investment for a long term, and trade investment is for a short term period. Therefore, trade investment is included in current asset. Similarly, in case of current liabilities, we can say bills payable, trade creditors, outstanding, short-term loan, etc. Here also, so all these are coming in your current asset and current liabilities, right? So current asset must always be more than the current liability so that working capital is positive. Working capital positive where current asset is greater than current liability. Working capital negative, this is a bad sign, that is current asset is less than current liabilities. If current asset is greater than current liability, then working capital is positive. If current asset is less than current liability, then working capital is negative. That means the company is suffering from the need of working capital. Right? This is not a good decision. Similarly, we can say there is a working capital ratio. Sometimes the working capital ratio is working capital ratio. That is your current asset by current liabilities. This current asset and current liability here, there is no specific standard, but from the general concept, we call this is the standard result is 2:1. That means current assets should be double of the current liabilities so that it is a healthy sign, right? In any case, the working capital should be positive. That means the current asset is greater and current liability is less. So this working capital ratio is greater than 1 or 2 or more than 2, then we can say it is a working capital is positive. But if it is too high, that means there are lot of current assets which are not moving, or we are taking lot of current assets which are idle, it may be. So let us start with the current working capital cycle. In case of the working capital, the cash is the most liquid one. Cash and bank is the most liquid current asset, right? So working capital cycle is a time period in which the cash employed in the business is again returning as a cash. How it is exactly working? Working capital cycle. Friends, whatever I am teaching here, at the end of the class, in this particular video, you can go through all the notes on working capital. There are some important questions which frequently comes in the exam. What is working capital cycle? What is permanent working capital? What is temporary working capital? Why working capital is needed in the business? How the working capital can be managed in the business? All these things with questions, with answers, diagram, everything is given at the end of the class. You can note it down and you can also read it. So let us start with the most important question, that is your working capital cycle. It is just like the cash, and cash is invested in finished goods, and finished goods, if cash is invested, suppose there is a cash, right? And with cash we can purchase the raw material, we can pay the wages, we can pay the overhead. So cash is invested in raw material. The businessman is starting the business. He has a lot of cash. He can purchase the raw material. He can pay the wages. And he can also pay the overhead. Right? So these are the cash employed in the business to generate income. Then with the raw material, wages and overhead, it started production, and when the production is started, a part of the production goes to the finished, and a part of the production remain unfinished. The unfinished production is called work in progress, unfinished. So we can come here to work in progress. That is your, again, work in progress. From work in progress, the finished goods are produced. So we come to the finished goods. Finished stock. Right? So finished stock means these are available for sale. From the finished stock can be sold on cash or on credit. Let us say the finished stock are sold on credit. So when the finished stock are sold, it is sold to the customer, and customer is called debtors. From the debtors, the money is collected. So cash become again circulated with cash. Therefore, it is a complete cycle. It is a complete circulation. It is just like a circulation of blood in the business. So, if we start with cash and we purchase raw material, paid wages, overhead, we started production, maybe it takes 15 days. Then on production started, work in progress is produced in say 5 days. Example, the work in progress become finished stock in 2 days. And finished stock are sold to the debtor. Maybe it takes 30 days. Right? Because all the stock cannot be sold immediately. So the finished stock are sold to the customer in 30 days. And debtors are paying after 30 days. Debtors pay after 30 days. So how much time it is required for a complete cycle? 15 days from cash to raw material, wages, overhead payment. Then again 5 days for work in progress. For 2 days to finish stock. 30 days to sale and 30 days for collection. So if we add all these things, this is your 22, 82 days. So friends, you are seeing in a 82 days, the cash invested in the day-to-day activities of the business again become a cash. And if we invest say 1000 rupees, when it is included here with profit, it becomes 1200 or 1300. And some profit is generating in the business, and that is called return to the business. So as the working capital cycle moves fast, as there will be number of cycles in a year, more number of cycles in a year, there is more circulation of money and more profit. Active working capital management. Suppose 82 days are necessary for conversion of cash into cash. So how many cycles are there in a year? Number of cycles, working capital cycles. 365 divided by 82. It comes to this is approximately 4.5 cycles in a year. Right? The management always try to short this period. This is 82 days. A efficient management can make it 60 days. So that if you divide by 60 days, there will be 6 cycles in a year. And it is beneficial for the business. So this is called working capital cycle, and the business always require capital to maintain all these activities. This is your working capital cycle. This working capital cycle has got lot of advantage and disadvantage. There is no disadvantage. Because the working capital cycle indicates your working capital need of the business, right? So you can write the notes, you can read the notes at the end of the class. So let us come to another part of the working capital, that is your types of working capital. If we take the types of working capital, there are generally working capital is of 2 types. One is your permanent working capital, and another one is your temporary working capital. This permanent working capital is the general need of the business. The working here, permanent working capital is the standard working capital what the business need as per its activity. Suppose a business started activity with 5,000 units. It increases activity to 15,000 units. So permanent working capital will also increase. So let us draw a graph. If we start with a graph, this may be our time, and this is your working capital. We always need a certain amount of working capital, right? So the permanent working capital is of this. As the time goes, the production increase, the permanent working capital also increase. So this is the case of permanent working capital. Right? Similarly, there is another working capital, that is your temporary working capital. Temporary working capital are needed sometimes the production increase due to overflow of order, and sometimes there is a change in the need of the working capital. As I can give you one example to you. Every day in your home you need 2 kg of rice. This is the standard. But sometimes you need 2.5 kg as some guests arrive. Similarly, sometimes you also need little bit less. So these are all the temporary adjustment with the working capital. The temporary working capital, we can draw a graph here. This is permanent working capital, and the temporary working capital will be like this. These are all temporary need of the business. These are all temporary need of the business. This is your temporary working capital. So permanent working, generally the company plan for the permanent working capital. However, it makes certain provision for or margin for the temporary need of the working capital in the business. Therefore, with the net working capital, generally 20%, 25% is added for emergency purpose, and this is your temporary working capital. Right? So this is very important that you have to answer what is permanent and what is your temporary working capital. Similarly, the need of the working capital, as you know, a small business need working capital less. A big business, they need working capital huge. So, need of the working, what question will be like this: what is the need of the working capital, or which factors the working capital depends? The size of the business, the nature of the business. If it is a seasonal business, then working capital is needed, heavy working capital is needed in a particular time of the year. If it is a normal business, the working capital is needed throughout the year. So, nature of the business is important. Then, type of production process. If the production process is too long, then working capital also, need of the working capital is huge. If the production process is too short, then working capital need will be very less. Then inventory turnover. Suppose the company is selling the inventory very fast, so less working capital will do. क्योंकि inventory is selling very fast. But if the company is unable to sell the working capital inventory, then lot of funds are locked in the form of stock. Lot of funds are kept in the form of stock. Therefore, more working capital are necessary. All these notes are available and I have given it in the end of this class. So sometimes a question also comes, comment, working capital is the blood of the business firm, justify. As you know, unless there is a working capital, you cannot do the business. So these are the questions which are often asked in your exam. And if you go through this chapter at the end of the class, then you will see all these questions with answers are available to you. So with this introduction, in the next class we shall start doing the problem on working capital management. That will be most helpful for the BCom, for the professional exams like CA, CMA and CS. Thank you.